Today is May 21st, 2025. It is 6:56 p.m. Pacific time as I am recording the video. And the following is a technical analysis on Smallies displayed throughout the daily interval in which I posted at 6:19 a.m. Make no mistake about it. We are within a rising wedge breakdown from lower high structure here. You have the rising wedge, clean rejection. I call it a multi-confluence triple transitioning price resistance level with the 200 exponential moving average and the 618 to 155 price fib resistance level. The price action rallied aggressively off the March lows, forming a steep rising wedge bearish pattern here. With the rejection confirms the wedge breakdown. Make no mistake, this is a solidified breakdown sell signal. The rejection confirmed the wedge breakdown and the reversion towards the fib midpoint here at the 2043 level, call it the 50% fib zone, which will be a critical decision zone here. A clean loss opens the door for a retracement back down to the 1971 382 fib level, in my opinion, or a bunch of stops to go off, margin calls, forced liquidations. With the relative strength index printing at the 5365 handle, it is losing its bullish strength here, rejecting from the 60 handle level, and that is still neutral. But the wedge break signals that momentum shift, in my opinion, with moving average convergence on a bearish crossover confirmed, with the histogram accelerating downward here, undercutting the zero line threshold, supporting the wedge breakdown thesis. Again, I reiterated inside of the Discord in the chat, this was a divergent high in a stealth negative and bearish divergences here constructing on multiple key technical momentum indicators, all four technical momentum indicators. And let me clean this space out to show you it was really hard to catch by the naked eye. You have to zoom in. There's your divergent high, series of higher highs. And here was your negative. This was your RSI divergence. And the price percent oscillator, negative and bearish divergence, very clean to the eyes there. Stochastics 1033, you have negative bearish divergence there as well. Just validating how steep that breakdown was, but a stealthy divergent high. But what I really want to see now is the 2043.50 confirmed with a daily candle close breakdown, maybe tomorrow or the next coming days there. But that with volume, setting some stops up above the 2117 handle, call it the 618 fib resistance level, in confluence of a descending major primary downtrend price resistance level, where long traders and or bull traders would need to take that level out aggressively to spur any health back into these key technical momentum indicators. Because the Russell 2000 is breaking down from this rising wedge pattern after slamming into a triple threat resistance zone. Momentum indicators confirm exhaustion, and a daily close below the 2043 handle only solidifies the case for a deeper correction, where the wedge has cracked and the Russell stands at the edge of a potential reversal cliff here. Bulls must defend the 2043.50 handle, or the bears reclaim control of the mid-cap battlefield here. And just for a key measurement sake here, you're looking at a close on a breakout above that triple transitioning price resistance level for 4.5%, 5% begin that scale and out process, down to the 382 fibs retracement for 3.8% crash to the downside, down on a complete backfill of the gap, the 236 fib, called the 1883 handle for 8.2% in gains. Down if things get really bearish and extreme to the downside, 1740 handle for a colossal 15.2% crash to the downside. And as yields roar, and the 30-year yield flirts with the 5% cherry, Smallies are standing here on the edge. It could be a slow motion margin implosion across the heartbeat of America's most levered small caps, where a higher borrowing costs and are really choking some of these fragile balance sheets while refinancing windows slam shut. And as liquidity dries up, some of the zombie firms that make up a huge chunk of the Smallie index could ultimately bow and face execution by bond vigilantes.